And one of my favorite topics, and there has been some recent research around that, is how life insurance fits in an efficient frontier and how you can use life insurance, properly structured life insurance policy within your asset management framework.
Welcome to the Rainmaker Multiplier on Demand, a podcast for leading financial professionals, or rainmakers, and their teams that offer support for securing a successful future. From marketing help to staffing structure, listen and subscribe for actionable insights from advisors and skilled professionals alike.
Good morning, everyone. Thank you for joining yet again for another coffee break here with C2P. Taylor Mackey, Executive Vice President. Sorry, you guys got me twice this week. I had a cup of clarity. Now you're getting me for coffee break too. It's an all cup themed spring break week. So I'm very excited to bring on my guest, though I think, everyone pretty much at this point knows who he is and kind of his role he's filling at C2P. But kind of an exciting announcement. I don't know that is common knowledge. Again, it wasn't cup of clarity, but we are expanding the offering we have at Tax Management Journey. Especially for our upcoming, this will be the first time we do it with our upcoming tax management journey in May in Charleston, South Carolina. So if you haven't booked your reservation yet, go ahead and get that taken care of. But we're going to be adding some advanced life concepts to tax management journey. And here to talk about that today is our very own Stoyan, Senior VP of Advanced Markets here at C2P. Morning, Stoyan. How are we doing today?
Excellent. How are you guys doing?
Well, we're going to talk about your favorite topic. I know, something that we could probably spend hours on with you, but can you just maybe kick off things by talking about what's going to be added to the tax management journey training, kind of elaborating a little bit on some of the advanced life concepts that we're now going to bring to that training starting here in May?
So this conversation came about after the last tax management journey that Dave Allison put out. And he and I had a conversation, and he said, well, we talk about tax concepts, and life insurance is a key topic within the tax management journey and some of the things that we talk about during that training. And so why don't we single out some of those life insurance topics and do it kind of on the back end of the tax management journey? And I welcome the idea because I geek out on life insurance. So this is one of my favorite topics. But some of the things that we put together for discussion and training on the back end of the tax management journey next month are going to revolve around using life insurance as an asset class. Now, we talk about life insurance within the soon and later buckets. We talk about life insurance and how it addresses the sequence of returns risk. We're going to cover taxation of life insurance. And one of my favorite topics, and there has been some recent research around that, is how life insurance fits in an efficient frontier and how you can use life insurance, properly structured life insurance policy within your asset management framework. We will also go over topics about charitable life insurance planning and how life insurance fits within that framework. We're also going to cover long-term care planning techniques. And those are some of my favorite topics to discuss because of not only how life insurance policies need to be structured and how advisors need to understand how those riders work, but because there are some unique tax advantages that you can address with properly structured asset-based long-term care and life insurance with long-term care riders. We're going to talk about second to die policies and how those can be structured with long-term care riders and how you can use the flexibility of that, of the long-term care within a second to die framework to address also estate taxes. We're going to talk about the be-owned beneficiary planning within long-term care because everybody knows that one of three things are going to happen. You're either going to die too soon, you're going to live too long, or get sick along the way. So I'm going to incorporate a framework that talks about the 9 words that sell long-term care within that planning that we're going to do. There's going to be a section on estate taxes and how life insurance helps address that. We're going to talk about ILETs and the role of ILETs and how they factor into the planning aspect, the funding techniques for different trusts that use life insurance. We're going to discuss wait and see planning with keeping in mind that the Tax Jobs and Cuts Act is going to sunset next year, at the end of next year. We're also going to touch base on the IRA stretch concepts. We're going to go into wealth replacement trusts using spear arbitrage and the importance of policy reviews. That's one of also my favorite topics. That's just scratching the surface.
Just scratching the surface. So here's the good news to everybody in the audience. We've only extended TMJ by 6 days to incorporate all of this into. That's a lot you just said. I know we can't give away the training ahead of time. So let's just talk through a couple maybe key things that you mentioned. Let's start with the estate tax side of things. Obviously life insurance has always been a crucial tool in estate tax planning and planning for estate tax issues. How do you see that today? How do you see that maybe changing in the future? And obviously, where do you think life insurance really has the key fit when it comes to planning around estate taxes?
Well, life insurance is the only asset in the entire tax code that is income and estate tax free if structured properly. Life insurance doesn't care what the tax regime is. It just doesn't. And because it's a self-completing vehicle, it has enjoyed those advantages from an estate tax perspective and tax perspective for that matter. And we all know that brackets are going up and brackets are also going to be compressed. And I think Dave Buchwald, I'm going to borrow that from him. He always talks about that and trains his office on those concepts. But if you look at just the amount of debt that we have currently in this country, I think as of this past weekend, we were up at $34.5 trillion. And it just keeps going up, and it goes up by about $1 trillion every 100 days. And if I ask you, did you know that between Social Security, Medicare, Medicaid, and the interest payments on the debt, we're at $5 trillion per year. All of the tax receipts the government gets are also $5 trillion. So that means that everything else from all other spending, from the Department of Justice, from the FBI, from NASA, Department of Defense, all the defense spending, etc., is borrowed. So that's kind of gets you thinking, because there has to be a comeuppance at some point. And what I always talk about is, I give an example with 100 billion borrowed today. Did you know that 100 billion borrowed today is equivalent to $2 trillion that's being added to the debt? And I know that people talk about $100 billion today is nothing in comparison to where the deficit is, but 100 billion, if you assume a perpetual 5% interest rate, and that's a very easy perpetuity to compute in finance, 100 billion borrowed today at 5% interest rates, because you're not going to be repaying that ever. That is equivalent to $2 trillion in present value that you're adding to your debt. So when you hear people talk about that on TV, that's what you have to pay attention to. And on top of it, knowing that taxes are going to go up, I know that Dave Allison always talks about that your money can go only to 3 places: your family, charity, or the government. So where do you want your money to go? That's the question that you typically ask of people. And how do you want to fund for it? And most people like to have their money go to family. A fair amount of people want a portion of it or all of it to go to charity if they don't have anybody else. Very few people want to have their money go to the government. So how do you address that? And life insurance is the only vehicle that can do that in a very cost-efficient manner for pennies on the dollar. I hope that made sense, but that's one of the biggest aspects of using the life insurance as a planning technique, because for pennies on the dollar, you have all this wonderful protection that can help address so many issues.
Totally made sense. So I feel like we all need antidepressants now in addition to life insurance, but that's okay. What about, some things I hear about, especially estate tax planning, is it's really only a problem right now today for the ultra wealthy. Is that an accurate statement, or do you see there are areas where advisors should be focused on if the estate tax issue for maybe clients of more, not modest means, but certainly maybe that mass affluent market?
Well, it only makes sense to talk about the ultra wealthy based on the current estate tax exemption, right? And we know if they don't do anything in the end of next year, that estate tax exemption goes down quite a bit. On January 1st of 2026, I'm going to use an estate equalization example to prove that point. If, let's say, you have a family that has 4 kids and the family business is doing very well, and only one of the kids wants to stay in the business and work that business. Well, how do you, if the family business is the majority of your assets, how do you make sure that the other 3 kids, when they go in and go after their dreams and they have families and move out, how do you make sure that everybody's treated equitably? And maybe you leave the business to one of the kids, but you use life insurance to make that equitable transition to the rest of them. So it doesn't have to be for the ultra wealthy. There are so many planning techniques that you can use. I mean, you talk about not just businesses, but farms. You can use that example throughout the country for any type of small business that you have.
You mentioned business, farms. I think there's a lot of advisors that would like to serve the small business market better. How do you see life insurance as maybe an entry point for that market?
Well, it's pretty much the only tool that you have that ensures that you won't have to raid your company's treasury to pay off your business partner, spouse, and kids if your partner passes away. So we see that in a lot of buy sell situations, and not only that, but uh, a lot of businesses use life insurance to retain key people. They use it as a fringe benefit, as a golden handcuff to keep executives that they prove valuable. And whether it's going to be through keyman life insurance policies to protect the business, whether it's going to be through split dollar designs to lend executives money to buy their own life insurance policies, whether it's going to be no qualified deferred compensation plans, where you can structure a plan, basically a retirement plan for the executive when they work in your business for 20, 30 years, to have that safety and security of having a retirement benefit and also have that protection benefit for their families. And life insurance is the most tax advantaged that you can use in those types of scenarios, especially non-qualified deferred compensation planning, because if it's structured properly, the cash value inside the life insurance policy is growing on a tax deferred basis. So it's not being taxed by the IRS, and you can fund for those benefits for the family, whether it's going to be a death benefit if the executive passes away, whether it's going to be the retirement benefit if they decide to retire at some point, and you can structure multiple vesting schedules. And we're going to go over that at the tax management journey with specific examples and how those work. And there are so many things that you can talk to business owners about.
I heard make sure Jason knows I need a key man policy is what my takeaway was from that. I don't know what everyone else's takeaway was. You mentioned 3 places the money is going to go at the end. Obviously family, IRS. The third one, that charitable side. How does
Yep.
life insurance kind of fit in, and what are some maybe unique advantages you see in the charitable market using life insurance?
So one of the biggest ones, and I'm only going to touch on one because of the time limitation that we have today, the charitable remainder trust. And with the charitable remainder trust, an annual distribution is made to a beneficiary or beneficiaries for a period of time. And that period of time can be flexible. And when that period of time expires, the remainder of those assets go to the charity. And even though CRTs or charitable remainder trusts are irrevocable, the donor, when they commit those assets to the CRT, they receive a charitable deduction. And the charitable deduction is calculated based on how much of that CRT pays out to the beneficiary. And if you have a highly appreciated asset, the donor avoids any capital gains tax. So once they transfer that asset to the CRT can sell that asset without any concerns about that inside gain. And then the donor receives an immediate charitable tax deduction, or income tax charitable deduction, I should say, for a portion of the property that was put into CRT. Then the trustee can manage those assets inside the CRT on a tax advantage basis. And so how do you replace that asset vision being irrevocable? How do you replace that asset back to the family or to the donor? Just use life insurance. It's the easy answer.
I feel like all roads in this conversation are leading back to life insurance. Not a surprise, right?
I know. It's fascinating, isn't it?
I don't want to give the farm away, especially because now we've extended TMJ by 6 extra days to accomplish all of this stuff. But do you have a quick case study that you can maybe just share with our audience today? Obviously, if you want all of it, you're going to have to register and attend Tax Management Journey, but just maybe something that's a quick takeaway that we can use today to drive some value home here at the end.
I did talk a little bit about the state equalization, and that's one of the biggest uses of life insurance within that framework. But also, I talked about yesterday. I had a meeting with an estate planning attorney, and we had a discussion about the uses of charitable remainder trusts, especially in today's environment when you have somebody who owns a ton of crypto, and they have usually millions of dollars of gain with that crypto. So there are ways to structure that in a charitable remainder trust that you can transfer that crypto into the trust and retain anonymity, because a lot of those crypto millionaires, they enjoy their privacy. They want to stay anonymous, but they also want to do their planning because it's like a lottery ticket. You put in $20,000-$30,000 into a crypto investment 10 years ago, and you may be sitting on millions of dollars today. And so putting that into a charitable remainder trust and just using some of that income today, having some of that go to a charity on the back end, take a deduction today on your income taxes, and maybe do some Roth conversion planning. And on top of that, to replace that asset, you have to use life insurance. That's one very simple example, very recent as of yesterday.
Wow. Okay. Now I got to go find some crypto bros that can be clients. So not my standard
You
client.
never know. You never know. People that you talk to, everyday people, they may have that.
Yeah, I saw someone. This is random and off non sequitur here, but I saw someone there. They lost their gardener in the Bay Area because the gardener had become a crypto millionaire. So, that's kind of a strange story, but there you go. There's a potential client sitting out there, used to be cutting grass and now needs life insurance.
Yeah, but a couple of years ago, I was part of a group that put together a no qualified deferred compensation plan for a very big bottling distributor out west. And they had also a group of executives that had grown the sales of that company maybe tenfold over the last 5 years. And so how do you keep those people? And we put in a non-qualified deferred compensation plan in place with a cliff vesting. That's what the company president liked. He liked the cliff vesting after 5 years. And because he enjoyed the growth, his company became tremendously more valuable as a result of their efforts. And he wanted to keep them around. And he put a very decent plan in place, $50,000 a year contribution into a supplemental executive retirement plan with a split death benefit between the company and the executive's family, plus a guaranteed retirement income benefit on the back end. So there are so many different examples. I can bore your ear off.
This is the golden handcuffs example of what you're.
Correct.
I thought was a hilarious term.
Yes.
So.
Keep them around. If they leave with a cliff vesting, they forfeit all of it.
Let me make another note. Make sure Jason doesn't know about golden handcuff plan.
We're not going to talk about advanced markets only at the tax management journey. We're going to talk about different concepts. Very simple, very easy to implement. The policy review is just one of the best ones that you can apply to any everyday client.
Do you want to elaborate a little bit on that? What do you mean by the policy?
Well, I mean, when you meet with clients and you ask them a question, do you have life insurance? Well, there are only two answers to that. The one answer is no. And then the question is, why not? I mean, do you not have anybody you love or that you want to protect in case something happens to you? I think Tom Hagney used to have a talk about that as if you die, there are 4 questions that your wife is going to ask if you're a husband. And the 4 questions are: how much life insurance do we have? How long will the dollars last? Will we be able to stay in the house that we're currently at? And will our children be able to stay in the same school? So uh, those are the types of questions that people ask if somebody inadvertently passes away. And then the second answer is, yes, I do have life insurance. Oh, really? Well, when was the last time it was reviewed? And have you heard of the new products that are out there, the new versions of life insurance, the new riders that you don't have to be dead for your family to collect. So those are some of the things that we're going to talk about.
By the way, I just love the fact that you're like, if someone says no, they don't have life insurance, your response is, don't you have anybody you love?
Yeah, it's very, yeah, I let him answer that question.
Hey,
Caleb, I have a question.
Yeah, go ahead, Gary.
Stoy, and love the fact you're on the coffee break today. I had a question of wealth transfer, estate maximization, using single premium life insurance for some of the sideline money that a lot of folks have, at banks and CDs, things like that. Kind of speak to that and maybe just kind of share some ideas, concepts that you have around that.
Yeah. So with single premium life insurance policies, there are some products out there that require little to no underwriting. So you still have the death benefit protection that is built into it. You still have the tax deferrals. You still have all the benefits of a life insurance policy, including maybe some of the living benefits. So that's where you can use it as a vehicle, as a tool to protect against those contingencies. And then, yeah, people don't have to be scared of it, because typically the biggest objection that I hear about single premium life insurance is, well, it's a mech. Well, yeah, it's a mech. And so it takes on kind of the annuity taxation when it's a mech, but don't let that scare you, because it's not like an annuity death benefit where part of it will be taxable. The death benefit still comes out tax-free, and you still have access to the money. And it's not a bad technique for planning, but yeah, we can take it offline and discuss it with the specific numbers, but people don't have to be scared of that.
Caleb, is it okay for me to jump in and ask one real quick?
Yeah.
Okay, great. Stoyan, thanks for all your direction and help here. It's very informative. Off the top of your head, what is one misconception that really sticks out, a hurdle you typically consistently overcome when you're introducing this asset class to people that really maybe have a different thought process of what it means? Anything stick out?
The biggest objection that I hear from especially advisors is, well, my clients need to medically qualify for it. So everybody understands that life insurance has those tax advantages, and I mean, they're basically enshrined in our IRS code. But a lot of people seem afraid to talk to their clients about their health. But guess what? You do talk to them about their longevity when you do their planning. So their health is part of that longevity calculation. So yeah, what you can do is make that a point. You can be afraid of it, or you can just embrace it and say, well, part of a holistic planner is to make sure that we cover all of our bases. And that one base includes discussion about your health. And that health plays into not only your life expectancy, it plays into your retirement planning. It plays also in the ability to qualify for life insurance and protect your assets for pennies on the dollar.
I just want to say thank you all for joining us again for our coffee break today. Don't forget to tune in next week. We will have Dave Allison sitting down with 2 tax gurus, Charles Weldy and Greg Hammer, kind of keeping the tax train rolling in April. So they'll be talking about how tax management journey has helped them not only survive the busy time, but thrive in this business. Yes, I'm reading that word for word in the chat right now. So same thing you just saw. Everyone, thanks again for your time today. Have a fantastic finish to your day, and we will see you again next week.
Thanks for tuning in. This podcast was brought to you by C2P. an organization whose purpose is to educate, train, grow, and support holistic financial advisors so families can achieve true prosperity. Never miss an episode by subscribing now to discover new resources and strategies. Visit C2PEnterprises.com to learn how we can help scale and secure your business. At the time of delivery and any subsequent publishing, information was deemed reliable but is subject to change by the time of listening or viewing. The contents of this piece include options and projections of C2P, are subject to change, and are for informational purposes only. The information provided in this presentation is not intended to be individual investment, tax, or legal advice.